Joining me now is Marshall Koval, President and CEO at Lumina Gold. Great to see you again, Marshall.
Yeah, Mark, thanks for having us again today. Look forward to updating you here on Cangrejos.
For sure, the Cangrejos project in Ecuador, you're going to move the story forward for us. The company is moving towards a feasibility study sometime in the first half of 2025. You've already hired consultants, so many of which have worked on this project since 2018, so they're very familiar with Cangrejos. So can you update us on the process right now?
Yeah, basically, as far as the consultants go, we have more or less the entire team that have worked on 3 different studies for us moving forward here. We've completed a significant portion of the work that has to be done for the engineering. For instance, we've done the infill drilling to take the probable reserve to a proven reserve for the phase 1 of the project, the first 3 years of the mine life. We're also doing an extensive geotech drilling program that was completed here recently, and that's going to be the basis for the pit slope designs into the mine plan. That's fairly well advanced. And then the other part of the field work was the metallurgy drilling work for the ongoing metallurgical testing program that's going on now. So now we're moving into starting to look at the engineering phase, project layout, where the facilities go based on the pre-feasibility study, and trying to optimize those things. So that's kind of the high-level overview of where we're at. We're still on schedule to meet the first half of 2025 for the delivery of the feasibility study.
Marshall, you referred to the resource conversion and sample drilling campaign. Can you explain how this is much more than just a drilling campaign and how it supports the ongoing feasibility study?
Yeah, so if you take all of the classes of resources that we have for the project, there's about 20 million ounces of gold and 2.6 billion pounds of copper. In the pre-feasibility study, we had about 11.6 million ounces of gold and 1.4 billion pounds of copper make it into the PFS mine plan. So we phased the project. So the first initial capital period to be 30,000 tons per day. And then in year 4, you go to 60,000 tons per day. So what we've done is that first phase, the 30,000 ton per day, we went in and drilled that on 50-meter centers so that we could show a proven reserve once the feasibility study was done and it's positive. And then the only other thing I'd add there is in year 7, the plant in the PFS would go to 80,000 tons today. So right now we're looking at engineering the feasibility study with that same phasing. And it just gives us a higher confidence that the cash flow from the phase 1 period will pay for the expansion in phase 2 and so on.
All right. So for the rest of 24 and into 25, can you take us through the steps and the work that needs to be done as the company moves towards the feasibility study?
Yeah, so we're already started based on the phasing that I talked about, starting to look at engineering design and layout, and Ausenco is leading that process engineering infrastructure work, and that's well underway. We hope to have the metallurgical test program, or at least the significant drivers of the process design, done in probably the next 3 or 4 months. I'm heading down to Lima next week to meet with Plengi, Laboratorio Plengi, that is doing the metallurgical work with Ausenco, and our QP for metallurgy from Austin International, Jeff Austin. So those things are critical, and we're going to start a lot of the engineering related to capital equipment, what you need, and how we optimize the PFS layout for the feasibility study going forward. And then the next big thing that we need to do is once all the facility layouts are locked in, which we're really close to that, we just have to go out and do the facility siting drilling for geotech foundation design. So that'll be a program that'll start probably next month. But we're making really good progress moving forward with the project at this point.
Now, on the financing front, we've talked before about the precious metals purchase agreement that Lumina Gold has with Wheaton Precious to the tune of $300 million US. The company's drawn down nearly $30 million of that. So can you remind us about the nature of this agreement and how it benefits Lumina Gold, how it's advantageous?
Yeah, so the overall agreement is 300 million, and that basically provides 48 million for the feasibility study and some early works, things like accessing land areas and that sort of thing. And then basically there's a 252 million available on a pro rata basis for construction. Now, the PFS looked at a $925 million initial capital cost build for phase one. So basically about a quarter of that financing would be in place. And what we found at $1,650 gold, basically the cost of capital from the Wheaton deal was really competitive at about 8%. So that's really enabled us to stay away from the equities market as we move through the feasibility study. And it also gives some certainty that about a quarter of the financing based on the pre-feasibility study is in place to, once a production decision is made, to construct the project. So that really helps as far as future equity needs. So basically what that gives Wheaton is 6.6% of the gold produced over the life of mine of the project until 700,000 ounces are delivered. And then it goes down to 4.4% of the gold production. And there's a market transfer that we get $18 or 18% of the spot price until that 700,000 ounces are delivered. And then after that, it goes to 22% of the spot price that we get. Now, if there's an acquirer and the company is acquired, that stream can be bought down from the 6.6% of the gold production down to 4.4. So basically, as far as what it does to the PFS NPV, it reduces that about 10%. So all in all, with the equity markets over the last several years, really for the junior space, you're into heavy dilution once you're going to try to raise 50 million or thereabouts for a feasibility study. So we found this as a really good deal for both ourselves and Wheaton.
Marshall, you hinted there at the possibility of sale eventually, something we've talked about before, and that dual track strategy of moving towards construction while also keeping your eyes open for that possibility. Now, your colleague told us a few months ago when we spoke to Scott Hicks that the majors are looking for near-term producers or producers. So based on that, does it make logical sense that if and when you do look to sell, it would be around the time where you're getting close to construction?
So, what we've done here is we've really started to significantly de-risk the project. So beyond the feasibility study, we're working with the government of Ecuador for an investment protection agreement that would take us through construction. And that agreement would set royalty rates, it would set tax rates, it would set duty rates for major plant and equipment, basically taking the duty to zero for that sort of thing. So that's another big de-risking component. Also, we're in the process now. We're going to bring a environmental impact, ESIA, Environmental Social Impact Assessment consultant on board to start that permitting. So that basically will be done in sort of the time frame of the Wheaton deal, and we would hope to see permitting sort of by the end of 2025. So those things are really significant in de-risking it too. So I would say that, right now we're starting to see the M&A market heat up. There's been several transactions recently. So I think basically you'd be in the situation where at any time along this process, as we continue to de-risk it, that we may see interest from major mid-tiers or companies like that to look at the property and there'd be a potential deal. That's I think what Scott was alluding to.
Right. And Scott also mentioned the fact that Lumina Group historically has sold assets at various times throughout the process, from exploration onto even producers over the years. So let's just wrap it up here in terms of the gold price at a record high. We've seen gold stock starting to move. Lumina Gold stock is up about 50% in the past 6 months or so. So do you think gold stocks are starting to bridge that gap with the gold price. And against that backdrop, what's the investment case right now for Lumina Gold?
So I think at any metric you look at Lumina Gold, we're still trading at a significant discount to where we should be. So I think from an investment perspective, for instance, since 2017, when we put out our first resource, we've quadrupled the resource. At the same time, the gold price has gone up maybe about 80%. Copper price is probably up around 30 or 40%. And overall, with all our financings and such, our share price has only gone up about 10%. So today we're trading at 62 cents a share. I think there's a lot of upside to the price movement. I think there's still, in the broad general sense of the market, a disconnect between all-time high gold price and equity prices. We've seen a move up. I'm on the board of Equinox Gold. We've seen some good moves in Equinox share price here recently. So I think there's still a lot of room for the equities to move up towards that gold price. And I think we're in a good position where we're starting to see some movement beyond the producers down into the developer space. We've seen that with Adventus, who we merged Luminex Resources with recently, and we've seen it with our share price in Lumina. So I think we're in a good place, and I think there's still a lot of upside to the stock.
All right, exciting stuff, Marshall. Thanks so much for the update today. We'll see you down the road.
Okay, Mark, appreciate your time and your listeners' time as well. Take care.
You too. That's Marshall Koval, President and CEO at Lumina Gold. Thanks very much for watching today, and we'll see you next time.